The United States is winning the battle against inflation just 1 week away from a crucial meeting where a potential interest rate cut will be evaluated. The European Central Bank unanimously approved another interest rate cut yesterday. In the crypto world, all purchases are being absorbed. Are we on the verge of a crash? The cost of living in the United States continued to decrease in August, according to the most recent inflation report. The Consumer Price Index (CPI), one of the main indicators used to measure the increase in prices across a variety of goods and services, recorded a monthly rise of just 0.2%. This brings the annual inflation rate down to 2.5%, marking its lowest point since March 2021. Economists had projected an annual inflation rate of 2.6%, so this lower than expected figure has strengthened expectations of possible action by the Federal Reserve next week. Inflation in the United States has been on a steady decline since the peaks reached after the COVID-19 pandemic, when supply chain bottlenecks and strong demand drove prices up. In response, the Federal Reserve aggressively raised interest rates to contain the situation. Currently, interest rates are in the range of 5.25 to 5.5%. However, with inflation nearing the 2% target, there is speculation that the Fed might be ready for a rate cut. Despite the overall optimism, some elements of the report show that not all inflationary pressures have eased. The core CPI, which excludes the volatile cost of food and energy, rose by 0.3% in August, slightly above expectations. This figure leaves the annual core rate at 3.2%, which could make the Fed cautious about making any drastic decisions. The upcoming Fed meeting will be crucial in determining the direction of monetary policy. Investors and financial market analysts are closely watching for a potential 25 basis point cut in the federal funds rate, a move that would be seen as the beginning of a shift toward easing after years of tightening. Meanwhile, the European Central Bank (ECB) announced a quarter-point interest rate cut yesterday, setting the main rate at 3.5%. This decision didn't surprise analysts or Eurozone countries, as it aims to make credit more accessible for households and businesses in a context of moderate inflation at 2.2% and a slowing European economy. The move comes at a time when the ECB has revised its Eurozone GDP growth forecast for 2024 down from 0.9% to 0.8%, partly due to geopolitical tensions. ECB President Christine Lagarde emphasized that this rate reduction confirms the downward trend that began in June with the first cut. It's quite clear to see the direction we've taken, Lagarde said, reiterating the ECB's goal of bringing inflation down to 2%. However, Lagarde gave no details on the ECB's next steps, stressing that decisions are made on a meeting-by-meeting basis depending on economic data. So, yes, as you can imagine, this week we'll all be closely watching the Fed's decisions regarding interest rates. Now that they've beaten inflation, we strongly suspect that, of course, the decision will be to lower the rates. This aligns with a market that we see as positive. On the screen, we have the S&P 500 on a 4-hour time frame. And how are we tracking the price? We see that after this impulse, we've had a correction. And yes, we're expecting this upward movement that has already started to continue and give us that bullish retracement we'd love to see. In fact, if we zoom in a bit more, we can see how this distribution process has reached its target and immediately reversed. This abrupt movement after hitting the institutional target is something we frequently observe. So for the S&P 500, as I mentioned, we're expecting a follow-up to this impulse. However, we'll also be watching to see how the price reacts when it reaches the zone. And when I say reacts, I'm not looking for the price to drop suddenly, but rather for some type of pause and then continue upward. So it will be a matter of waiting, but yes, we are positive about the traditional market. We'll see if in the coming days we manage to surpass the all-time high. Now let's move on to the crypto market. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Now, on the screen, we have the BNB chart on a 4-hour time frame to remind us where we've come from and how we'll be tracking the price. As you can see, we have a strong upward movement here, corresponding to a macro bullish Z wave, where we also have its trend line, which remains intact. This line is key for us to continue monitoring. Now, let's zoom in a bit. We're now looking at the 1-hour chart, and here we see an impulse, a channel, a range, and a bearish climatic action. For those who listen to us often, it won't be a surprise to hear that after a bearish climatic action, we expect a correction in 2 legs, where we've already seen the first one. And yes, we're expecting a second leg. But before this second leg starts, we would need to see a slight correction. Let's focus on this point a bit more. Here we have a click that we're evaluating as part of a medium-term bullish accumulation process. This aligns with the bullish Z wave I showed you earlier on the 4-hour chart. But being bullish in the medium term doesn't prevent us from expecting some short-term drops, and I'll explain why. This accumulation process still feels incomplete. We would like to see it develop a bit more before breaking to the upside. Therefore, we will be looking for opportunities to enter short. We're going to look for sell opportunities opportunities, but that's not all. Let's zoom in a bit more, going to the 15-minute time frame where we see even more reasons to believe there's an imminent drop, and we're going to pay a lot of attention to the volume here. We have a disproportionately high volume compared to the average of the previous candles. And what did the price do? The price was soaring and suddenly stopped. All these buys couldn't push the price higher. So what are we seeing here? We're seeing buy absorption. And here too, check out this wick and volume. The price tried to go up, but it wasn't allowed to continue. So what does this tell us? It tells us about buy absorption. What does that mean for us? It means that the smart money is selling, so we're going to expect the price to react by moving down. And this downward movement, due to all the buy absorption we've seen recently, will also give us the correction we're looking for before we move up again. So in the short term, we are bearish. But let's make a clarification here. We don't have a crystal ball. So if the price doesn't move down in the short term as we expect, after seeing this level of buy absorption in such high volume, we could expect that if the price goes up, it will do so with significant force. However, we're assigning a very low probability to that happening in the short term. Because, as I mentioned earlier, going back to the 1-hour chart, we're going to wait for this accumulation process to continue developing. At the same time, we'll allow this bullish impulse to take a breather before continuing upward. Let's see what the Solana chart shows us. Remember that on the 1-hour chart in Solana, we're seeing a corrective pattern where we've already had the W, a weak EY, and we're currently in a bearish Z wave where we've drawn its trend line here. And as you can see, this trend line remains intact. So yes, the Z wave is still in play. And let's not forget, it's a bearish Z wave. Zooming in a bit more, we can see a creek here where we're also evaluating an accumulation process. So at some point, we're going to expect this process to break upward, but not too quickly. In recent days, we've seen compression against the creek. But let's zoom in a bit more on this compression. And what do we see? Volume. Once again, just like in BNB, we have a lot of volume here, and this volume corresponds to a bullish impulse that couldn't continue upward and instead pulled back. Again, here with high and steady volume, the price is pushed back down. And again, this candle with a small body relative to the wick and a very high volume compared to the previous candles tells us that the price was immediately stopped as soon as it tried to rise. Once again, we're seeing buy absorption, therefore smart money in this zone is selling, which reinforces our bearish outlook. And if we look a little further, we can see an impulse followed by a bearish channel, leading us to think that this channel may continue and seek a bearish climatic action. Now, let's take a look at the MicroStrategy chart. But before we do, notice what we were seeing in Bitcoin earlier this week regarding this upward movement.
What would we like to see? An attempt to break through the flat pattern. A climatic action. Could they set a trap? Maybe a small one. Could they set a trap? A climatic action. That climatic action is buyable. Without a doubt, they might want to go after this level. They'd love to touch it. And I think it makes sense for them to aim for it. It could end in a gap, just so you know. And that level is 55,614. What I want to explain is that a bearish climatic action could be the ideal final point to look for a buy. If you're searching for something similar, that would be the idea, trying to buy the bearish climatic actions as well as at the price level of 55,600. Here, it would also be a good idea to look for long opportunities in the market, in this case, in Bitcoin. What does that allow us to do? Well, to have a very tight, limited stop loss, while we aim for a truly interesting move. The first boundary will be here, but since they want to reward us with a larger accumulation process, the reward will multiply exponentially. That's why, no matter what, it makes a lot of sense to try and buy Bitcoin's climatic actions.
And this is also what we were observing for Ethereum.
So, what are we looking for? What do we want? We want to look for those drops. We want to look for those declines that have already started and might continue. Why not? Up against this structure we've just identified. Thanks to the cross-analysis, it suggests that Ethereum's equivalent doesn't seem to be the defense zone we were speculating about. So without any issue, we're searching for the structure that validates these hypotheses. And it looks like this is it. So, we'll wait for more drops, all right? Ethereum has to fall a bit more. But the key is to search for opportunities. In the case of Ethereum, to find a trap and look for those buys. What do we want? That replication, that repetition, and of course to break through this creek. Tight stop loss, you already know, and we're aiming to win much more. That's the general idea.
And also the buy point we were looking for in Solana.
We're also speculating about the distribution hypothesis, which has reached its target almost perfectly before turning around. They love working on this, and we're considering that this could have been a climatic action, and now we're looking for the replication. For that to happen, as you're seeing, we're giving it a small margin, but we're allowing some room for a drop where buying opportunities will appear around 129.67, approximately. It could fall a bit more, but these are buy points. And let's see if this takes us to the creek first, and then of course we'll wait for a break to get a much larger reward.
And here we have some great news for you. We've just launched our private Telegram channel, Crypto Insight Premium, where every day we host a live session analyzing the market in depth and looking for buy and sell opportunities. Registration is now open and it's very easy to join. All you need to do is create a BitUnix account or deposit cryptocurrencies worth at least $100 and use these accounts as your main trading account. In other words, start trading. Once you meet these requirements, simply fill out a form with 5 easy questions, and within 72 hours, we'll grant you access. You can find the form in the pinned comment of this video. Don't miss the opportunity to join our growing community. We're waiting for you. Now let's analyze MicroStrategy. We already know that the strong correlation between MicroStrategy and Bitcoin helps us better understand what the market is saying. Remember that on a macro level, we're experiencing a bullish Z pattern, with its trend line being this key defense zone that's still holding up. And if we zoom in, let's go to the 15-minute chart. What do we see here? First, we have a bearish impulse, and we'll see if we get its replication because we have a very important defense zone here. We can also observe that a process of accumulation is forming, similar to what we've seen in the other 2 assets we analyzed earlier. Here we have the price, which allows us to anchor this creek, and we can already see how it's reacting to it. Lastly, after this climactic action, we've experienced a bullish impulse. Just like with the other assets, we're waiting for a pause, a breather, before continuing upwards. This will help complete the process, which, like with the other assets, is still not ready yet. Therefore, in MicroStrategy, as with the other assets, we will look for opportunities to go short, aiming for that pause I just mentioned before seeking out this bullish replication. If you want to see more details on what we think about Bitcoin and Ethereum, we've left a video on the screen where we analyze both of these assets in depth. Don't miss the chance and click the link. Good luck with your trades and see you next time.